Do you want to mint money? Well, what if I told you there's a license out there to print money? And the best part is, it is totally legal. In today's video, we will talk about what Elon Musk warns us about the future, and how we can use it to our advantage and print our own money. Come on. Let's fetch some paper. Everyone looks forward to the future. It might be an upcoming business deal or that vacation you've been waiting on, or even that Christmas gift. Well, the future is always in our present thoughts, and we live to make it better with our actions today. In an effort to make the future better, in particular, environmentally, the world is moving towards zero carbon emissions. We rely heavily on fossil fuels to move around in our cars and perform other activities. With a better future in mind, this will hopefully become a thing of the past. The future, as you probably guessed, is electric vehicles. EVs are an important part of meeting global goals on climate change. They feature prominently in mitigation pathways that limit warming to well below 2 centigrade or 1.5 centigrade, which would be in line with the Paris Agreement's targets. However, while no greenhouse gas emissions directly come from EVs, they run on electricity that is, in large part, still produced from fossil fuels. Unfortunately, there's a problem. And if there is a problem, then a solution must be found. Did you know that problem solving is the best way to print money? I'll show you how in a while, but before that, here comes the warning. Elon Musk, the most famous executive serving on multiple boards, had a special message. He expressed a global need for battery materials which are in high demand with little supply to back them up. The Tesla CEO said that there are software-like margins to be made in lithium processing, adding that the practice is basically minting money. I'd like to once again urge entrepreneurs to enter the lithium refining business. The mining is relatively easy, the refining is much harder, said Musk. You can't lose, it's a license to print money. But before we start printing this money, let's talk more and understand why it is crucial. Money talks, and so do we. Welcome to Dollar Talk. I've got a little riddle for you, are you ready? What's soft, silvery white, and could make it harder for the world to go green? The answer to the question is lithium. Lithium is a non-ferrous metal known as white gold. It is one of the key components in batteries. During the oil crisis in the 1970s, Stanley Whittingham, an English chemist, had an idea for a new source of energy that could lead to fossil-free energy one day. In his first attempt, he tried using titanium disulfide and lithium metal as electrodes. But the combination posed several challenges, including serious safety concerns. After the batteries were short-circuited and caught fire, Exxon decided to halt the experiment. However, John B. Goodenough, currently an engineering professor at the University of Texas at Austin, had another idea. In the 1980s, he experimented with using lithium cobalt oxide as the cathode instead of titanium disulfide. This attempt paid off. The battery doubled its energy potential. 5 years later, Akira Yoshino of Meiji University in Nagoya, Japan, made another swap. Instead of using reactive lithium metal as an anode, he tried using a carbonaceous material, petroleum coke. This led to a revolutionary finding. Not only was the new battery significantly safer without lithium metal, but the battery performance was also more stable, thus producing the first prototype of the lithium-ion battery. Together, these discoveries led to the lithium-ion battery as we know it. Time to put your history and chemistry books away. We are here to talk about money. Right? Batteries are everywhere, you can't miss them, and you are probably consuming the power out of one as we speak. And today we'll focus on EV batteries. According to figures from the U.S. Department of Energy Science and Engineering Research Center, Argonne National Laboratory, a lithium-ion battery pack for a single electric car contains about 8 kilograms of lithium. The world needs at least 2 billion electric vehicles to get to net zero. But is there enough lithium to make all the batteries? Let's find out. As more automakers have moved to produce electric vehicles, demand and prices for lithium have soared higher. Lithium is becoming a lucrative business as electric vehicles become more prevalent and miners are enjoying the rewards. Underlying lithium prices have skyrocketed by 600% this year. Nickel, a critical component of most lithium-ion batteries, has seen a huge price surge in the first few months of 2022. The Russian invasion of Ukraine destabilized nickel's global supply, as Russia was one of the top producers in 2021. Prices for other important materials used in EV manufacturing, such as palladium, are also rising. This war in Ukraine and disruptions in global distribution networks have strained supply. Demand for battery metals will continue to grow as the world strives to reach net zero emissions. Musk says lithium refining is tougher, which makes it a perfect market in which to make some money. Joe Lowry, CEO of Global Lithium, a company that advises clients on the development of lithium-related projects, urges more people to join the lithium business. He says, in the next 2 years, even though there will be significant growth in supply, it will be less than demand, so the gap will just continue to grow. You can build a battery factory in 2 years, but it takes up to a decade to bring on a lithium project. If you want to print money, well, the lithium business is for you. Stick around as we talk more on how you can take advantage of this money printer. Investing comes in many forms. And one of the ways anyone can invest in lithium and other minerals is through the stock market. When choosing lithium stocks, one decision is whether you want to invest in lithium startups or more established companies. Lithium startups are early-stage companies, still working on producing their mines and products. They might not be generating revenue. They have more risk, but their share price has more potential to grow, should things work out. More established lithium companies are already producing lithium and selling products. They have less risk and they are more likely to distribute profits to shareholders, making them useful for dividend investing. The drawback is that they don't have as much growth potential for stock returns. Another decision is whether you want to invest in companies focused on the production of lithium itself, like lithium mining stocks, or companies that process lithium or manufacture products, like lithium battery makers and lithium recycling stocks. For miners, success is based on the price of lithium. For manufacturers, price and demand for lithium goods are important, but so is the quality of their products. A well-diversified portfolio would have a mix of different types of lithium investments. If you need help putting this together, consult with a financial advisor for advice on which lithium stocks to buy. A little knowledge of the companies in this business will be helpful to start with. Let's go on, but before that, be sure to hit the like button, subscribe, and turn on post notification. This will ensure you never miss a money-making opportunity. There are many companies to invest in, but we'll focus on a few of them. These companies include Infinity Stone Ventures, GEMS. Infinity Stone Ventures is an exploration and development company focusing on developing critical battery metal projects in stable and mining-friendly jurisdictions. The company owns major battery metal projects in various stages of exploration. These are Camaro Halcat Lithium, Galaxy Pegmatite Lithium, Rockstone Graphite, and Zenhobori Copper. Battery-grade lithium spot prices have risen by 574% in January 2022 compared to January 2021. Additionally, copper prices reached a high of $10,230 per metric ton in March 2022. Next we have Ganfeng Lithium Group Company Limited. Ganfeng Lithium Group is China's largest lithium metal producer. The stock has been on a downtrend since mid-2021, trading about 45% below its 52-week high. Despite this, the company has seen strong earnings per share and sales growth over the last 4 quarters, jumping more than 432% and 265%, respectively. Therefore, it's worth checking it out. Another company of interest is, usually referred to simply as SQM, is based in Chile. The company harvests lithium resources from some of the best deposits in South America. SQM has a solid track record, reporting positive annual EPS figures for over a decade. The stock is up 60% over the last year and is 15% below its 52-week high. We continue on and we have another giant in this field. Albemarle Corporation, ALB, is the world's largest lithium producer. Albemarle operates the only active lithium mine in the US. Lithium is ALB's biggest line of business, accounting for just over half of the company's revenue. The company has grown its sales by 30.8% over the last year and its EPS in 2022 is expected to be up 428.2% year over year. The stock is up 5.8% over the last year and is just 8% below its 52-week high. Last but not least, we have Sigma Lithium, SGML. Sigma Lithium is pursuing environmentally sustainable lithium production. It has generated no sales and negative EPS for the last 5 years. The stock currently trades 15% off its high. And now, with all the ink and paper and license ready, what are you waiting for? Let's print our money. But not so fast. There's something we forgot, and here at Dollar Talk, we don't leave it hanging. Why can't we start printing? Well, hit the like and subscribe buttons because we are just about to find out. Our printer, the stock market, historically has delivered generous returns to investors over time. But it also goes down, presenting investors with the possibility of both profits and losses for risk and returns. So what are the disadvantages here? Let's talk about it. What if I told you our press is emotional? Yes, that's right. The stock market loves to go on an emotional roller coaster. Stock prices rise and fall second by second. Individuals tend to buy high out of greed and sell low out of fear. The best thing to do is not constantly look at the price fluctuations of stocks and just check in on a regular basis. Another con in this venture is risk. You could lose your entire investment. Let's say, if a lithium company does poorly, investors will sell, sending the stock price plummeting. And the moment you sell, you will lose your initial investment. We also have taxes. If you sell your stock for a loss, you may be able to get a tax break. However, if you sell your stock for a profit, you'd be liable to pay capital gains taxes. Well, everyone here wants to print money, right? So we'll definitely have to compete, which leads us to another disadvantage. Professional competition. Institutional investors and professional traders have more time and knowledge to invest. They also have sophisticated trading tools, financial models, and computer systems at their disposal. Last but not least, the master of them all: time. If you are buying stocks on your own, you must research each company. Determine how profitable you think it will be before you buy its stock. You must learn how to read financial statements and annual reports and follow your company's developments in the news. You also have to monitor the stock market itself, as even the best company's price will fall in a market correction, a market crash, or a bear market. Should you invest, the value of your investment may rise or fall and your capital is at risk. Before investing, your individual circumstances should be assessed. Consider taking independent financial advice. And with all that, we are now ready to act on Musk's warning and print our money legally and wisely. So, as you print your money, don't forget to turn on post notifications so that you don't miss our next video. Also, let us know your thoughts and feedback in the comments section and what you would like in future videos. Thank you for coming this far. Enjoy your license.